So let's go to the opportunities again, because again, we want to make sure everybody understands how these opportunities play into these type markets. So like Rocky said, we're focusing on the investment strategy and the wealth enhancement. So out of the 5 strategies that we have in our playbook here, last week we talked about the draw and let heal strategy. If anybody wants to go back and revisit it, it's on our YouTube page and you can take a look at that. This week we're going to focus on the strategy 1, which is active management reallocation of sectors. So this one's an extremely important one. It's been going on as this market has been evolving. But let's talk a little bit about how. First, let's go to the fundamentals, because fundamentally, when you think about what drives the returns in a portfolio, it has always been asset allocation decisions. That's 91% of what makes up the returns in a portfolio. From there, only 2% of is market timing. Then you got stock selection, and then you got other items. So the main focus is, where are we allocating the resources? So that's the biggest part here. And that's why in this environment that we're in today, tactical management is critical. If you are passively managing, again, you have winners and losers that come out of these type markets. And if you're passive, you're not going to take advantage of shifting sectors. But if you're tactical, you will absolutely be looking at the laggards, trying to get out of those, and then looking at the sectors that are moving forward. So let's kind of look at this. We looked at this chart earlier. We're going to bring it back again, because again, in a lot of the portfolios, we did have European positions in the portfolio, but many of the portfolio managers have already started pulling out of Europe investments and moving more towards the US. Again, tactically shifting the portfolio. And this is going to make a big difference moving forward for everybody. Same thing with emerging markets. When you look at emerging markets as a whole, the blue bars that we have here are really, they took a big hit. That's all of the emerging markets. When you look at strictly Asia from an emerging market standpoint, well, the returns here are looking better and better long term than aggregating all of the emerging markets. So you want to be more tactical, more specific as to where you want to be investing. And these, again, are things that the portfolio managers are doing. So some of the sectors that we're concerned with, well, travel related sectors, gas and oil, transportation, basic materials, real estate, those are all areas that got hit hard and are projected to have kind of a slow growth moving forward in the near future. What is now turned very bullish, and even in some cases was bullish prior to this, is things like communication, e-commerce, managed care. Information technology is just skyrocketing right now. Business services, as you have a shift in the way businesses are going to perform and what type technology they're going to need in the days ahead. These are the areas that are moving forward. So tactical management isn't just going to stay in everything it was in before. It's going to make adjustments, and that is what's going to eke out a better return overall in our portfolios for our clients. So that has been going all along since this whole thing started. As you can see on this chart here, you've got the weightings of each one of the sectors from minimum, neutral to maximum. You can see no one's really overpumped until you get into the opportunistic income and even cash and cash equivalents. Those are more on the maximum side. Then you've got a lot of them kind of on the low side of neutral. like large cap stocks or investment grade bonds. And then minimum, you're looking at mid and small equities and also developed international equities. So we're looking at this, our portfolio managers are, as we're going through this whole process with our clients and with the markets. We are actually shifting many of the portfolios, especially if they're more conservative, over to more of a tactical nature portfolio through this process. So you can count on us to make sure that your portfolio is doing everything it's supposed to do, as well as the strategies are there to be implemented to make sure that you can get all you can get out of your money. So that is what we're here for. When you talk about where we are in the process with these strategies, last week we talked about the fact that we are right now paying taxes on any pre-crisis Roth conversions that we might have done. We are also, while the market is up, we're also paying up all of the life insurance premiums that might have been past due and now or are now due. We will pay the taxes on those as well as we do the conversions to the life insurance. So you will, if you're in that position, you'll more than likely get a phone call from our office letting you know that we're executing that for you. Again, actively working to make sure we got all we can get out of this market for you. Anyone that is in the draw and let heal strategy, we are not reversing anything at this point. We're still pulling the money out of the fixed accounts. So we will let you know when we have to shift back. But right now, remember, most of you have about 6 months worth of income that you're pulling from. So we still got some room, but we will keep you informed on what's going on with that.